It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. I'm your host, Brian Beatty. Thank you so much for joining me this morning. I know it's a little early on a Saturday, but appreciate you being here. Really looking forward to this weekend's show. I've got a lot to talk about. This is usually the time of the month where I talk about just numbers, a lot of data this episode on what's going on in the Charleston housing market. I am joined this morning in the studio. We are live by Bill Sandvig of Movement Mortgage, whom I have had here several times. Good morning, Bill.
Good morning, Brian.
And what we're going to do is we're just going to kind of lay out the groundwork here for what I'd like to talk about this weekend. If you have any questions, we are in the studio. The number here is 843-556-1250. 843-556-1250. And I do want to say that if you're considering buying or selling a home, now is the best time to do it. It's just the busiest time of year. We would love an opportunity to earn your business. So feel free to go to my website, listingsincharleston.com, or give me a call, 843-345-1273. So here's what I want to talk about this weekend. First and foremost, I want to put some good vibes out there. We've had a lot of really good success stories over the past few weeks. Bill, you've been included in some of those. So I want to talk about that and just kind of give you guys an idea of what can happen in this market if you do the right things, if you follow through, and if your agent does what they say they're going to do when you hire them. Wouldn't that be nice? Of course, the majority of this show, I want to talk about just the market in general. I want to give you guys a bunch of stats. We're going to read through the Tri-County area. I'm going to give you the housing supply overlook and just overall tell you where I think some of the opportunities in this market are, as well as talk about what I think our market needs. Then lastly, after that, we're going to talk with Bill about qualified mortgages and a few of the things that he really wants to share with you, some good information in that regard. And then I want to talk with you about some investor mistakes that I've seen take place over the past few months. Something that I really want to talk about. As some of y'all may know, I am a real estate investor in addition to helping people buy and sell real estate. So I want to talk with you about that. So first and foremost, let me talk to you just for a quick second about my listing guarantee, because it has come to my attention that there are some agents in this market that think that the guarantee that I have is smoke and mirrors. It's a trick. It's a trap. It's not real. I'm going to tell you.
I'm going to cut in on you and just say that the fact that other realtors are talking about you and they're targeting your guarantee, that's a testament. Every time that another lender, we hear a story about someone talking about Movement Mortgage, about things that we're doing wrong or that we can't do what we say we do, I like to smile because I know that the competition likes to break us down.
Right. Well, I just want to say very briefly, if this is your first time tuning in, I have a home sale guarantee, and it very simply states this: I will sell your home in 59 days or less, or I will sell it for half my commission. So that's the guarantee. It's a very real guarantee. It is not smoke and mirrors. It is not a foot in the door technique. It is me putting my money where my mouth is to tell you that if we sit down and come up with a plan that I think will work, then I am willing to tell you that based on my previous level of experience in selling hundreds and hundreds of homes, if we do these things, we have an excellent chance of selling within the first 60 days, which is the most important time to be on the market. Now, having said that, this guarantee is not for everybody. What I do know is that whenever you put a guarantee out there like that, people will naturally try to take advantage of it. There will always be those types of people in any market. Doesn't matter if it's here in Charleston or in Los Angeles. So it doesn't apply to everybody. There are some exclusions. There are some things that will need to be done and some things that we'll need to talk about to determine whether or not that applies to you and your situation. But just wanted to get that out of the way first, because it's just come to my attention that there's a lot of real estate agents out there that are saying that guarantees like this are not a real thing. So I'm just here to tell you it's a very real thing, folks. I am not in the business of losing money, so it's in my best interest to work as hard as possible for you to sell your home. And it doesn't matter if it's in the first 60 days or not. If it doesn't happen, it's not like my motivation to help you sell just goes by the wayside. We're here to get the job done. And quite frankly, I play to win. You know, if you've listened to me, you know I'm an aggressive agent and I'm a competent agent. And I am here to lay out a plan for you, help you sell, and get the job done. It's all about results.
I mean, one of the most important things in our business is integrity. I mean, if you don't have integrity and do what you say you're going to do, that word spreads. And if that word spreads and a lack of integrity, then your business doesn't grow. So,
exactly. I've been around for too long. I've been in the top 1% of agents since 2009. So, why don't you try offering that guarantee, Mr. or Mrs. Agent, and we'll see how that goes for you. But anyways, I had to get that out of the way because it's something that's been circling the drain for the past few weeks, and just wanted to get that off my chest. Anyhow, I said I wanted to put some good vibes out there, so that's what I want to do right now. If you have any questions, give us a call. We're in the studio, 843-556-1250. We represented a buyer together, Bill. I also represented the seller, and this is, in my mind, a great story because it answers a lot of questions that people have in this market. One of those big questions is, how do I get a good deal on something? The other side of it is, how do I sell quickly and get a good deal on the home I'm selling so that I can move on? I don't necessarily want to be on the market for 6 months. So here's the situation. I spoke with a seller. He contacted me, went through his house, told him what his house was worth. He said, I need to do a few things. It's going to be a few weeks before I list, but when I do, it will be with you. During that time, I spoke with a buyer whom I connected just doing my daily prospecting, trying to find people to help buy and sell real estate, trying to help find buyers for my sellers and find sellers for my buyers. And this particular person was somebody that I knew, and I said, hey, I've got a seller that's going to be putting their house on the market in 2 weeks. This is something you should really consider because it fits what you're trying to do perfectly. So prior to that seller getting on the market, I brought the buyer over and I said, hey, let's walk through it. If it's for you, then let's go for it. He ended up buying it. Seller ended up selling it. Both parties extremely happy with the way the transaction occurred. It was a fair deal. Seller didn't get the short end of the stick. Buyer didn't overpay for anything. It was just a good, quick, clean transaction, and everybody won in it. And it's just, those are the types of things that I love putting together because, you've got two different types of agents out there. You've got the agents that, they'll put your home on the MLS, they'll put their sign in the yard, and then they'll just wait for other agents to show it and sell it. And don't get me wrong, you can sell real estate that way. That's not necessarily the way I do things. I'm very much so a proactive agent. But that's me. That's the other side of the coin is, I sit down, I make myself find new business because in my mind, real estate agents have two jobs. They've got to represent their current clients to the best of their ability, but they also have to find new clients. And in finding new clients, they find opportunities for their current clients. And I don't think a lot of real estate agents focus on that particular side of the business. But in this specific instance, we were able to find a buyer a great deal. We were able to provide a seller a quick and clean contract. And Bill, you represented the buyer on the mortgage, and it could not have gone any smoother because of the way you guys do business. And that is that you take that buyer through the underwriting process before they make an offer. And it was just such an awesome deal. I wish there were more like it.
Yeah, I mean, going to that closing, the first two people that arrived, I was the third person to arrive, and sitting at the table was the buyer and the seller, and there was so many smiles, and I mean, I thought they must have been brothers, because you don't see that every time in a real estate transaction where both sides really felt like the deal was correct.
Right. Right. So, what's your takeaway from that, listeners? The takeaway from it is that when you sit down with somebody that's a professional, you lay out a plan, and you work with somebody that's competent, that's trustworthy, and that can get the job done, hopefully it's a smooth transaction, but that's what you're relying on that agent's experience for, is to get you through that transaction to the best of their ability with the fewest cuts and bruises as possible to your financial benefit and a stress-free transaction. And that's exactly what that was. Two more success stories, and then I'm going to take a break because what I really want to focus on in this show is just the market in general, give you guys a good idea of what's going on out there. So two more quick success stories. We had somebody call in a few weeks ago that was having trouble identifying the value for their house. And I know that she listens regularly, so I hope you're listening. You can't tell, but I'm smiling because it's just a great story. She was having trouble coming up with the value for her house because it's the nicest house in her neighborhood. And naturally, when you have the highest home or highest priced home in your neighborhood, everything else is priced below that, which means that you have the potential for appraisal issues. You have the potential for other agents to say, oh, well, the average price per square foot's lower than that, so we're just going to offer what the average price per square foot is. And we sat down and we said, look, the way to price property is not to just look at everything that has sold in the past 6 months, take the average price per square foot, and that's what your home's worth.
And then go 5% below it.
That's not how you do things. So walked through the house. They have an awesome house. Went back, looked at the comps, which I think is the appropriate thing to do, rather than just shoot out a number based on a printout of 2 pages of comps. It's called a CMA. That in and of itself is something that I don't necessarily subscribe to. But I went back, I looked at everything that they had done to the house, come up with a value, and then boom, 2 weeks later, we're under contract within 2% of the price that we set, which, by the way, was significantly higher than what we thought the house was originally. We walked through and they said it was one price. I came back and I said, hey, I hope that this is good news for you guys. It's not me blowing smoke, but your house is worth a lot more than what you were planning on putting it on the market for. And then boom, we got it done. That's just a lesson in pricing, folks. And it's something that I've talked about a lot on this program because it's incredibly important. Pricing property in some instances is not easy. If you're in a neighborhood where almost every house looks the same, then yeah, you could probably do the price per square foot approach and get away with it within reason. That's what most real estate agents do. They just say, yep. Past 6 months, we've had 7 sales. They've sold for an average price per square foot of $130. I suggest that you do it at $132 a square foot. Sometimes that can work, but pricing isn't that simple, especially when you're in the higher income or higher price brackets.
Some of my favorite stories are the ones where a consumer thinks their house is worth one thing. They talk to an expert, and the house is worth 10% more, and it sells at the asking price. And you just think, I was moments away from walking away from tens upon thousands of dollars.
Well, that's the rarity too, is, most people think their house is worth more than it actually is.
Well, true.
So that's when pricing also is incredibly important, because that's when you have to sit down and say, look, this is what's going on. This is how we justify this price. This is what other people are paying. It's a rising market, so we take the trends into account, but we can't go too much above what else is out there. So that's another success story. I'll tell you what, we're going to take a quick break. When we come back, we're going to talk a lot about what's going on in this market. I'm going to give you guys some good data. We are live in the studio. Give us a call, 843-556-1250. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Stay tuned for more of the Brian Beatty Real Estate Show on 1250 WTMA and WTMA.com. WTMA. Expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. I'm your host, Brian Beatty, and I'm joined in the studio by Bill Sandvig of Movement Mortgage. We're here to take your calls, answer anything real estate related as it relates to the Charleston real estate market. We can be reached again, 843-556-1250. That's the number here in the studio. If you'd like to connect with me, you want to talk about buying or selling a house, choosing to invest in real estate, love an opportunity to help you with that. My number personally is 843-345-1273, or you can visit my website, listingsincharleston.com. And on that site, you can search the MLS, take a look at everything I have for sale, everything I've sold. Take a look at some testimonials from past clients. And if you're considering selling your home, click on the Sell Your Home tab, and you can learn more about my 59-day home sale guarantee at 4.5% commission. Listingsincharleston.com is the website to do that. So wanted to focus this segment specifically on just what's going on in our market. Obviously, this is the busiest time of the year for real estate agents, for buyers, for sellers, for everybody. School's out. It's when people are looking to buy a home. It's when most of the listings usually come on the market. So overall, it's just a good time to talk about data, and it's something that I focus a lot on. If you've listened to my show in the past, you know that I'm a numbers guy. You know that I follow the market and I follow the trends within it, so that when we sit down and we talk about buying or selling a house, you've got an idea of what's going on in the market. We use that to our advantage. It helps when pricing property. It helps when looking at property to purchase. You know, if we're looking at several homes and we're in a very competitive price range, then we need to be as prepared as possible, not only through the help of a lender like you, Bill, but also just in terms of information. And I'm finding that a lot of real estate agents aren't sitting down with their clients prior to helping them buy or sell a home. They're not diving deep into what's going on in the market. And that might be very simply because they don't understand it. They don't know how to really extrapolate the data and convey that in a way that makes sense to their clients.
Usable information.
Yeah, or it's just that they read some reports or they read the news or they just get an email blast from their broker in charge of their company. Hey, tell this to your clients to get them off the fence and help them buy or sell a home. Everything is situational in our market, in any market. Sometimes it boils down to the neighborhood in terms of how specific the data and the trends are and your knowledge of them, so that you can, of course, use that information to your financial benefit when buying or selling a home. So let me tell you what's going on in the Charleston market. And let me just give you some quick numbers here, and then we'll dive into some of the more specifics. Again, 556-1250 is the number here in the studio. First and foremost, right now is when most of the new listings are supposed to hit the market. And last month, we had a 6% increase in new listings. That's not a ton of new listings. When you look at our inventory, which is how we measure the health of a real estate market, our inventory is low. We have a lack of properties to sell. Pending sales is everything under contract, or all the contingencies to a contract have been satisfied and you're just waiting on closing on a property. Or it could be a home that you're waiting to have built, or it could be a cash deal that you're just waiting to close on. But pending sales were up 16.4% for the first 5 months of 2014 versus the same time in 2013. That's a big increase. That's, more properties going under contract and not as many hitting the market. And then when we look at closings were up almost 16%. Again, that's a huge number. Let's look at pricing for a second. Pricing overall, the median sales price increased 3% to $220,000 in the Tri-County area. So just taking a step back, it's very simple to understand what's going on our market right now. Prices are up. Inventory is down. There are more buyers than sellers in the majority of the markets in our Tri-County area. Inventory is reducing. How are we going to get out of this? How are we going to fix the issues and return to normalcy? Does it need to be fixed? Well, first and foremost, the reason that our market is so hot right now is, in my opinion, based mostly on the fact that we don't have a lot to choose from as buyers. So we've got a lack of inventory right now, which is what is shooting the price up. I mean, if you look at Mount Pleasant, the median sales price in Mount Pleasant is up 16% this year versus last year. That's a huge increase considering the fact that just in 2013 in general, prices were up 13% in Mount Pleasant from the year prior. So prices are shooting way up. And if you've been following the market, if you've been looking at buying or selling a home, then I would think you would know that. Same thing with downtown Charleston. Same thing with a lot of markets in the Tri-County area. It's very competitive in some places. So how do we navigate this? How do we use this data to our benefit so that when you're looking at buying or selling, we're doing the best job for you possible? Well, first and foremost, it just starts with having a good understanding of your specific market. And then it also has to do with your goals. If you're the type of seller that, I'll sell it if they give me my price, I'm not really in a rush, well, then that's one strategy. However, if you are of the mindset of, all right, I really want to sell my house. I want to do it during the summer. I don't want to have my kids move into a new school district, mid-year. I want to do it now. Well, then we need to come up with a strategy to get you sold in the next 60 days. And so I wanted to use this market data, and I want to go through something here. And Bill, I want your help with this. Think about this for a second. If you live in a house and you've got a $300,000 mortgage and your family's growing, it's time for you to move up. It's time for you to buy a new house. You just need more room. And you're going to sell your house and you're going to buy a house and you're going to have a $500,000 mortgage. Right now, where are interest rates, Bill, for the most part, 30-year fixed?
4.25.
4.25. Okay. So at 4.25 at $500,000 for a mortgage amount, what does that payment come out to? About $2,500?
Yeah, $2,450.
Okay. Right now, we've still got interest rates at 4.25%, and I want to focus on that for a second because there are many industry experts several months ago that said that by this time, we should be at 5.5%.
Yeah, I mean, rates have stayed relatively flat almost the course of the entire year, which is a surprise to almost everyone. Right.
It's a surprise to me. I could have bet on the farm that interest rates were at least going to be above 4.5%, maybe not 5.5% like some experts were saying. But think about this for a second. If your $500,000 mortgage goes from 4.25 to 5.5, it's not a huge jump. In other words, 5.5 is still a good interest rate if you look at interest rates over the course of a decade or two. We have certainly had our highs. We've certainly had our lows. 5.5% is still very close to the low end of where interest rates have been. What happens to the payment at 5.5%?
You're in that comparison, a $500,000 mortgage, you're looking at an increase of $380 a month.
So what is that, 15%? Increase in your monthly payment?
Yeah, about exactly 15%.
So I just want everybody to think about that for a second, because if you're on the fence about buying or selling a house right now, if you're considering selling, now is really the time for you to raise your hand and say, this is the time to take advantage of it. As I just mentioned, we don't have a huge increase in new listings. I'm working with a ton of buyers right now that are saying, where are the new listings? We've been waiting for the last 90 days for this spike in inventory that we're always supposed to get, and it's not there.
Yeah, to put that in perspective, that change in rate, we talk about buying a $500,000 home and making a certain payment. With rates higher at 5.5% in this case, the exact same payment equates to a $430,000 house. So you're talking about $70,000 difference in house that you could buy if somebody's right on that qualifying edge. They can today buy $70,000 more house than they could last year, because this is actually a very good comparison. This time last year, it was almost to the week. The rates went from being around 3.5 to around 4.5, and it happened in just a couple week time frame.
Right.
So it can happen quickly.
Yeah, that's a good point to make. Again, we're in the studio. 843-556-1250 is our number here. Let me break things down by county and tell you what's going on just in the Tri-County area. In Charleston County, if you look at new listings, they were only up 3.2% year-to-date versus 2013. Closings are up 3%. Median sales price is up 10%. Days on market, 81 days until a closed sale, and properties are selling for 95% of their asking price. Dorchester County, which is made up mostly, of course, by Somerville, at least in our Tri-County and our MLS. But in Dorchester County, we had a 2.2% increase in new listings. Closings are up 1.6%. The median sales price is up 5.9%. Properties are selling in 72 days, and they're selling for 96% of their asking price. And then looking at Berkeley County, we have had a 8.1% increase in new listings. Closings are up 16%. That's big. Median sales price is up 11.6%, and homes are selling in 69 days and for 96% of their list price. Last show, I did a segment about the luxury market in Charleston, and one of the things that has really surprised me is that if you own a home that's $750,000 or more in Dorchester County, you're going to have a very challenging time selling. I'm not going to say it's impossible. I would never say that. But last time I checked, there were 8 homes for sale, and there have only been 4 closings over the past 3 years in that price range. If you look at Charleston County, that's where 90 or so percent, close to it, of our luxury properties are. So that's what's skewing those numbers a little bit in Charleston County. If you're in something like Mount Pleasant or downtown Charleston, your numbers are going to look a lot better. In fact, if you're in Mount Pleasant, in lower Mount Pleasant, below the Isle of Palms connector, then you're looking at a median sales price increase of 16% versus the same time last year. And that's a big increase. That's a lot to pay. If you're a buyer and you were considering buying last year and then things didn't quite work out, now you're going to buy this year, you're going to pay 16% more in some cases. Again, it's all neighborhood specific. You've got some neighborhoods that have a ton of property for sale, and there's really not much going on in those neighborhoods. Then you've got some, like, let's say the Old Village as an example, where prices have increased to the point where $300,000 gets you a lot.
Let me piggyback on that, Brian, back to what we were just talking about. So 16% in lower Mount Pleasant, the $500,000 home this time last year, 3.5% for a 30-year fixed. It was a $2,250 payment. After a 16% increase in today's rates, that exact same house would have a $2,830 a month principal and interest only payment. That's an increase of almost $600 for the exact same house you could have got last year.
Wow.
I would not be surprised if it happens again from this point to this point next year. So buy a house.
And, I don't want anybody here to think that we're pressuring them into moving. Obviously, it's whatever's right for you and your family. But what we are trying to point out here is that there are some sections of our market that are just going gangbusters, and it's very tough to find a good deal. And so a lot of people are asking, where are the good deals? Where are the foreclosures? Where are the short sales?
I mean, pressure, no, but definitely talk to someone. If you're thinking about it, talk to someone, because that's a big move from last year to this year, and we could have another big move from this year to next year. And you're thinking about that house that you love, and you're like, well, let me just wait one more year. You might be looking at a completely different house next year, unless your income goes up 25% to go along with a 25% increase in mortgage payment.
Right. And that's something I want to talk with you about next. We're going to take a quick break. When we come back, I want to talk with you about just the lending environment right now, what you're seeing, how you're helping people. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Again, remember, 843-556-1250 is the number here in the studio. And visit our website, listingsincharleston.com, for more information about buying or selling a house.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. That's lowcountryhomesales@gmail.com. WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Thanks for joining us this morning. We really appreciate it. We are live in the studio. The number here, 843-556-1250. We'd love to take a call or two, help you out with a real estate question, comment, concern. When I left, we were talking about the market, and let me just give you a very, very brief recap on that. If we look at just the months of supply in general, which is what we've focused on over the past several months, the months of supply right now is at 5.4 months. An average market is around 7-8 months worth of supply. That just means that at 7-8 months worth of supply, there's no increase or decrease in pricing or inventory. It's just a stable market. You can expect a few percentage points a year in appreciation. It's just a normal market. Right now, we're at 5.4 months of inventory. That's about a 16% decrease from last year. So we went from being pretty much a normal market last year to being now a seller's market. If you look at the median sales price across the board, Tri-County area, we're up about 9%. So that's an encouraging statistic. We've had obviously several years of bad news in our market, so it's nice to be able to sit down with people and say, yes, Mr. Seller or Mrs. Seller, you have equity. Here's the amount that you can expect once you sell your home, rather than, I'm sorry, but you don't have any equity in your home. Have you just considered a short sale? Because that's what we're looking at right now.
Yeah.
So great place to be in our market. Really enjoying kind of riding the positive wave and helping people buy and sell real estate. Love my job, love what I do, and I always just want to take a quick second in every show to just say thank you to the clients and the service providers and people like you, Bill, that entrust their business with me. Really appreciate it. Wouldn't be here without it. And if there's anything I can do to help you, please feel free to give me a call, 843-556-1250 here in the studio. If you want to connect with me personally, my cell phone is 843-345-1273. Or you can just go on my website, listingsincharleston.com, connect with me that way. You've got a real estate question, comment, concern, something I can help you with. Listingsincharleston.com is the place to go. And of course, click on the Sell Your Home tab, and you can learn more about my 59-day home sale guarantee at 4.5% commission, which, as I mentioned at the very beginning of the show, is a very real offer. Bill, I wanted to talk with you this segment about just the lending market in general and get your opinion and views on that. And again, if there's anybody listening that has mortgage-related questions, 556-1250 is the number here in the studio. But I know you wanted to talk about qualified mortgages, so I'm just going to ask you the very basic question. What is a qualified mortgage, and why is that something that you feel important that we should discuss this morning?
Sure. So the first question that everyone asks me when a client comes my way is, can I qualify for a mortgage? Well, the term I'm talking about today is the qualified mortgage, and a new rule came out that defines lending standards, clearly defines them and actually pulls them back, and it's government regulation, and it's called the qualified mortgage. So I'm actually going to read the definition of a qualified mortgage. And this rule went into effect in January of 2014, and it has more of an impact than people might realize. So a mortgage in which the lender has analyzed the borrower's ability to repay based on income, assets, and debts. So basically, do we have a borrower? This rule led into more mortgage documentation. Lenders have to do a better job of documenting a customer's income or assets, making the qualifying process still possible, but more frustrating and challenging.
Okay.
Has not allowed the borrower to take on a monthly debt in payments that exceed 43% of pre-tax income, and has not charged more than 3 points in origination fees. So 43% of pre-tax income. That's a common term we refer to in the business as debt to income ratio. So your total liabilities and payments that appear in your credit report, plus your housing expense, can't exceed 43% of your income. It is a hard line. But the government put a stay on it, like they like to do, and they gave us 7 years to go above 43% debt to income ratio if we have a system or desktop underwrite approval. So if a computer takes all of the consumer or buyer's information and calculates this person is okay, we're allowed to go above 43% for 7 more years, or until Fannie Mae and Freddie Mac are out from being underwater. Once they've paid back the settlement and all the government bailout that they received, that 43% stay is going to go away. Now, we don't talk about it a lot, 43%. We talk about FICO score, credit scores. What does a customer need to have for their credit score to get a house? And I think the reason why we focus on that more is because if someone has a low credit score, it's kind of a black line in the sand. They can't buy a house until we fix that report. If you have a debt to income ratio that's too high, there's still a solution. You just buy less house. So you buy less house, and now you can be below that 43% because your mortgage payment is smaller. But I went back in my personal last 100 applications and took a look at, this is everyone that applied. Didn't know anything about the customer until the application came in. Some of them qualified, some of them didn't. But those last 100, there was only 13 applicants that had a credit score too low for me to work with. They were below that threshold. Of those 100 applicants, coincidentally enough, 43 of them, which is the same percentage we're talking about, 43 out of 100 had a debt to income ratio above 43%. So
let me get this straight. You took 100 applications, and 43 of those 100 had a situation where their debt to income ratio was above 43%, which is what the
new rule,
quote unquote, hard line in the sand is. So in other words, if you put all that information in your computer and the computer says, hey, sorry, you've got a 47% debt to income ratio, you can't get a mortgage.
Correct. So
you've been able to work something out.
Correct. So we still have the stay, so we can still do these loans at this price point for these people above 43% because the computer said the other factors are allowing for you to say this loan or this customer is okay. But I think it's significant to note that pushing almost half of those applicants for the house price that they wanted or the house that they ended up buying. In 7 years, they would have not been able to buy that home.
Right.
They would have had to buy less house, or would have had to have looked at paying off a car loan. That leads me into saying, for the love of God, buy a house before you buy a car. Please. You can get a car later. If you are trying to buy a house, don't go out and buy a brand new car and get a new car payment.
Are you talking about while house shopping?
While house shopping.
Oh gosh, I've had it hasn't happened very often. I can count it on one hand, but we've been working with buyers and showing them houses, very educated, and then the buyer goes out and they go and buy a new bedroom set from Rooms to Go, or they go and they get a car lease, or they do something like that. It throws their debt-to-income ratio out of whack and they can't buy a house.
Yeah.
Oh, God, it hurts when that happens. Not for the agent, really more so for the buyer, because they didn't know. And so now when you sit down with people and you have a very consultative approach to buying or selling real estate, that's obviously one of the things that you talk about that would seem like common sense, but some people just don't know, and you've got to let them know. And that's part of the job of the real estate agent and the loan officers to say, here's how we're going to get you through this, and here's how we're going to lay it out so that we make sure there are no bumps in the road. And if there are, we're going to get over them expediently and to your financial success. I tell you what, we're going to take one more quick break. When we come back, we're going to talk a little bit more about this because this is intriguing to me. And then I also want to talk about some investor mistakes that I have made. So I want to help you by learning from my mistakes, but just in general, what to avoid when looking at investment property. Again, we are live in the studio, 556-1250 if you have a question, comment, or concern. And this is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. We'll be right back.
Visit Brian Beatty's website at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker, 1250 WTMA. WTMA. You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. Thank you for joining us this morning. Time always goes so fast this morning when we do this program, especially when we do it live. So if you have any questions, comments, concern, anything real estate related here in the Charleston area, feel free to give us a call. 843-556-1250 is the number here in the studio. Anything personally you want to talk about, you want to connect with me, my cell phone is 843-345-1273. And you can also visit my website, listingsincharleston.com. Connect with me that way. Learn more about my experience. And if you're considering selling your home, learn more about the 59-day home sale guarantee at 4.5% commission. Bill, when we left, we were talking about qualified mortgages, debt-to-income ratio, what it all means, and your ability to use programs and systems to basically see past that line in the sand of, if we look at your income and we look at all of your recurring monthly expenses, it can't be above 43%, but you have kind of a way around that, and that is to be able to look at things individually on a case-by-case basis by doing what you're calling, a desktop review. Is that correct?
Yes, it's a desktop underwriter or the decision engine that Fannie Mae and Freddie Mac actually put out. And so if you fit their layered risk mold, then you can actually go past that 43%. One of the things that I want to piggyback on this is the importance and urgency of when you're thinking about doing a real estate transaction, probably one of the largest transactions that you'll do in your lifetime, is the importance of getting information earlier rather than later. If you're thinking about it, even if it's a year off, give Brian a call, give myself a call, so we can look and create a plan. If you plan, things just go better, they go smoother. And one good example of why this is you need to talk to an expert. You can't just say, okay, this is what my paycheck is, these are my bills, I can buy this house. You can't do it on your own because there's a huge difference between take-home pay and earning and qualified income when it comes to a qualified mortgage. And there can be a huge disparity. And a good example is self-employed borrowers. I mean, a self-employed borrower, in order to buy a house, we might need to get together prior to you filing a tax return. And I need to say, look, I know this is what you've done in the past, but if you want to buy this house, we got to wait until you file 2014 returns, and we got to actually plan for what your income is going to be in order to get you a house. So I just want to say, consumer out there, get in touch with us. Let us help you create a plan. Let us identify what your picture is, what your qualified mortgage looks like, so we can execute. Now, there is this stay on the 43% DTI. We've got a couple years before that's going to expire. But I want to share some good news. As the economy recovers and as housing prices improve and people are feeling more comfortable, outside investors do come into the market. Banks are going to start to feel a little bit more comfortable with their lending. And what's happened is the big banks have become very nervous, and they tighten up the restrictions that are already there and things that are called overlays. And so they will say, well, I know that Fannie and Freddie would allow for me to do a loan at 620 credit score. We're not going to do one unless it's a 660. That would be an example of an overlay. Well, recently, a couple of very exciting changes as far as overlays go that's going to open up the door for some more consumers. I want to highlight two of them. One is rental income qualifying for income. In the past, you had to be a landlord for 2 years to have rental income count. Now, if you have a lease on the house that you're leaving, you can actually count that income. This is a big deal.
That's a big deal.
It's a big deal because the question is, do I have to sell my home before I can buy my next one? And the answer can now be more than ever before, no. You can rent it for 6 months. You could rent it for a year, and we can count that income, go buy your house, and as long as you have that lease. So that is a very big one. And it's a question I get asked by agents. I get asked by you all the time. Do they have to sell their house first?
Right.
So,
and that's an important thing to say, in that when you consider buying a house without selling your house first, and just that entire process in general is very stressful for people. There's just no way around it. They want to make sure that if they put something under contract, or if that home that they are selling is under contract and they now need to go buy something, it is vital that you work with somebody that understands that process, that can protect you contractually, which I see happen, unfortunately, more often than not, where somebody tried to sell their house and then buy something else. It didn't work out. They lost their earnest money. They packed up their house. It didn't close. There's a lot that can go wrong. So just on that specific topic, outside of the financing portion of it, which is equally as important, if that's what you're considering doing right now, is moving, selling your house, buying something else, give me a call, because it really needs to be done with a professional that can really get you through the process without any headaches, because the last thing you want is to either lose your earnest money or be homeless.
Yeah, and that's what we really strive for, is to have that approval done if it's a 30-day transaction, a 40-day transaction. Let's get that peace of mind to know we've got a loan in the first week, the first 2 weeks, so that you can focus on boxing up your house without worrying about, am I going to have to unbox it? And that is just priceless for everybody involved, whether you're the seller or whether you're the seller of the house you're buying. And they might be going to buy a house right behind that one.
And I want to make sure that for people that are just tuning in or catching the tail end of this program, I'm speaking with Bill Sandvig of Movement Mortgage, and what he just said is very important that I want you guys to really understand. And what he is saying is that Movement Mortgage underwrites a buyer before, or has the ability to underwrite a buyer before they make an offer. So in other words, you're not working with a pre-qualified buyer. You're not working with a pre-approved buyer. They have the ability to tell you, yes, this buyer can get a mortgage. We've reviewed everything prior to them making an offer. They're good to go. So don't worry about that financing falling through at the last minute. This is an approved buyer. Shop with confidence. That's a great feeling to have if you're a seller that's going to sell your house and then go and buy something else. And
Brian and I have worked together enough that Brian knows how to use that as a negotiation tool. He can take your offer and that house you want in a multiple offer situation and show that purchaser why your offer is better, because you have an approval and you're not a risk. You're not a risk to that seller. Their house is not going to end up in escrow. And Brian will get you a better price because you're show how your offer looks better compared to someone else who just had the pre-approval.
Right on. Bill, thank you very much for joining me. I appreciate you being in the studio. And if you have any real estate questions, we're out of time, so feel free to connect with me personally, 843-345-1273. Go to my website, listingsincharleston.com. Happy to help you out in any way, even if it's just answering a simple question or giving you some advice. No charge, no cost for that, no commitment for that. Just happy to help in any way I can. And
you can find me at www.lowcountrylending.com.
Very good. Thanks again for joining. This is the Brian Beatty Real Estate Show. Have a great and safe weekend, and we'll catch you next week here on the Big Talker, 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273. Keeping the Low Country informed for 75 years.
WTMA, Charleston.
Accumulate.